Hi, and welcome to Symax Fintech Weekly Market Insights. As usual, it's broken down into 4 parts. Part 1 is where we look back at what happened last week, the highlights, followed by what we're expecting this week, then my macro outlook, and lastly some technical analysis on a variety of different asset classes. So I hope you'll stay with us for all of them. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so let's have a look at what happened last week. So China data was better than expected, so that's a little bit of encouragement there for global demand. And Ueda from Japan, he sort of hinted that there could potentially move away from negative rates, but other people close to him have been saying that that was sort of misunderstood what he was saying there. So, it's going to take a little bit of time to find out what's really going to happen. So let's have a look at what happened last week. So US CPI came in at 0.6% month on month, which is 3.7% year on year. And the core CPI came in at 0.3 month on month and 4.3 year on year. So it's still well above the target rate of 2%. Jobless claims came in pretty much in line, not too much there. PPI though at 0.7% month on month and 1% year on year. Again with the core being 2.2% year on year. So still just that little bit too high for the Fed. Retail sales came in better than expected at 0.6%. That's again sort of not bad. And New York Empire State manufacturing came in at 1.9%. Again, that was better than expected. That was actually expected -10. Moving on to capacity utilization, 79.7, which is better than expected. Just remember, 80 and above is growth. So it's and that's been creeping up slightly. So that's really promising for the US still, not so much for the rest of the world. Industrial production came in at 0.4%. And Michigan consumer sentiment was 67.7, which was a bit lower. Okay, moving on to the EU, ZEW -8.9, industrial production -1.1%, which was again lower than expected, which is 2.2% year on year. Negative that is, and ECB hiked rates 25 basis points, but also said that that was their 10th consecutive rate hike. Now puts them at 4%, and it's likely to be their last one. Of course, we just got to watch inflation because likely is not definite. In Germany, ZEW came in at -79.4, which was lower than expected. Moving on to the UK, employment was -207,000, The unemployment rate 4.3%, so that was unchanged, but obviously away from its lows, which was around about 3.6, give or take. GDP negative 0.5% month on month. So that's we've got to wait till the end of September, early October before we're going to see the real GDP data. So don't read too much into that at the moment. Industrial production was down 0.7%. That was lower than expected, and 0.4% year on year. Then manufacturing was better than expected, negative 0.8% month on month and 3% year on year. So in Canada, manufacturing came in up 1.6% month on month, which was better than expectations. Then China, house price index still in negative territory, but only negative 0.1%. Their other data came in better though. So industrial production came in at 4.5% year on year, and retail sales came in at 4.6% year on year. I mean, retail sales was only expected to come in at 3%, so that's quite a substantial beat there. So maybe things are just stabilizing, bottoming out in China. I wouldn't say they're recovering yet. They've still got a lot of issues with their real estate, but again, they're trying to different sort of strategies to try and encourage and boost the economy. In Australia, the unemployment rate was 3.4%. And also, where are we looking here? Sorry, the employment rate should be 3.7%. In Japan, PPI was better than expected at 0.3% month on month, which was 3.2% year on year. And capacity utilization came in negative at 2.2%. Industrial production negative 1.8% month on month and negative 2.3% year on year. So, Japanese economy is again steady. It's not really moving forward that much. As I said at the beginning, that will they come out of negative rates this year? I've said from the beginning of the year that I expected them to, but it is just a matter of waiting and seeing if they're going to do that. I think that the economy in the data is good enough for them to be able to do that if they wanted to. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, if people are looking to get into trading, then our sort of introduction to trading is a great one. Trading for beginners, and then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1 week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class.
and the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging FX and commodity exposure. And then, of course, we provide a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby at Symax Fintech. Sorry, go back to that one, Chris Tubby at symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.